Based on the historical data and forecast, Bitcoin has shown a downtrend over the past 2 weeks, with the forecast indicating further decline. The RSI consistently below 70 suggests the asset is not strongly overbought, while the recent dip below 50 indicates weakening momentum. Considering the support price of $95,000 and the forecast prices consistently below $102,900, a short-term bearish outlook is warranted. Therefore, I recommend a short selling strategy with an entry price of $102,900. The stop loss should be set slightly above the recent high of $105,800, at $106,000, to limit potential losses if the price unexpectedly reverses. The initial target price is $98,600, aligning with the forecast for June 12, 2025. To refine this strategy, we'll incorporate Bollinger Bands. The price consistently trading near the upper Bollinger Band suggests a potential pullback. We will combine this with the RSI strategy. If the RSI falls below 30, indicating an oversold condition, we will cover the short position at $101,400. This combined approach leverages both momentum and volatility indicators for a more robust risk management profile. The final portfolio will be 60% short selling strategy and 40% RSI strategy. Based on the historical data and forecast, Ethereum demonstrates a volatile trend with periods of consolidation and sharp declines. The RSI consistently fluctuates, indicating indecision in the market. The Bollinger Bands show periods of expansion and contraction, suggesting varying levels of volatility. Given the recent drop to $2,400 and the current RSI of 46.2, I recommend a long position strategy. Entry price should be set at $2,560. A stop loss should be placed at $2,420, just below the lower Bollinger Band, to mitigate potential losses. The initial target price is $2,580, aligning with the first day of the forecast. To maximize potential returns, I suggest a dynamic target price strategy. If the price reaches $2,580, move the stop loss to the entry price of $2,560. If the price continues to rise, set the next target price at $2,580, based on the forecast. If the price falls below $2,420, exit the position to minimize losses. This strategy combines RSI signals, Bollinger Band analysis, and forecast data to capitalize on potential upward momentum while managing risk effectively. This portfolio is designed to achieve high returns with calculated risk management. Based on the historical data and forecast, XRP has been exhibiting a sideways trend with fluctuations around the $2.1 to $2.3 range. The RSI consistently fluctuates around 40 to 50, indicating neither strong overbought nor oversold conditions. The forecast suggests a continued downtrend, with prices hovering around $2.1 to $2.13. Considering the Bollinger Bands, the price has been oscillating within the bands, and the forecast suggests it will continue to stay near the lower band. We will implement a combined strategy leveraging RSI and Bollinger Bands. My recommendation is to initiate a short position at $2.25. The stop loss should be set at $2.48, just above the upper Bollinger Band, to protect against unexpected upward spikes. The initial target price is $2.08, aligning with the forecast price and the lower Bollinger Band. If the price reaches $2.08, we will move the stop loss to break even, which is $2.25, and set a new target price at $2.06, the support level. This strategy combines trend following with risk management, aiming for high returns while limiting potential losses. Based on the historical data and forecast, BNB shows a clear downtrend, particularly evident in the recent forecast prices consistently below $600. The RSI consistently dipped below 50, indicating a weakening momentum. The Bollinger Bands are contracting, suggesting a period of consolidation before a potential breakout. Considering these factors, I recommend a short position strategy. We will enter a short position at $642, placing a stop-loss order at $692, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The initial target price will be $613, aligning with the first forecast price, which would yield a profit of $29. To refine the strategy, we'll incorporate a dynamic adjustment based on the RSI. If the RSI reaches 80 during the short position, we'll immediately close the position and secure profits. Conversely, if the RSI falls below 20, indicating a significant oversold condition, we'll move the stop loss to the nearest support level of $618 to protect profits and potentially re-enter a long position later. The final target price will be $602, giving us a profit of $40. This combined strategy leverages both technical indicators and forecast data to maximize potential returns while effectively managing risk. Based on the historical data and forecast, Solana exhibits a clear downtrend. The price has consistently fallen from $176 to $144 over the past 2 weeks, with the forecast predicting further decline to $133. The RSI consistently remains below 60, and has recently entered oversold territory below 33, suggesting potential for a short-term bounce, but the overall momentum is bearish. The Bollinger Bands show that the price is approaching the lower band, reinforcing the bearish sentiment. Therefore, I recommend a short selling strategy. I propose entering a short position at $144. Given the strong downtrend and the forecast, a conservative stop loss should be placed slightly above the recent high at $147. The initial target price should be $141, aligning with the forecast. If the price continues to fall, the target price can be adjusted to $137. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk. The RSI indicates an oversold condition, which could lead to a temporary bounce, but the overall trend suggests further downside. The Bollinger Bands confirm the bearish outlook, and the forecast provides a clear price target. Based on the historical data and forecast, TRON shows an overall upward trend, consistently testing the support level of $0.275. The RSI fluctuates between 49.5 and 66.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation, but the forecast projects a breakout with prices moving towards $0.295. Therefore, I recommend a long position strategy, capitalizing on the anticipated upward momentum. Specifically, I suggest entering a long position at $0.278. Given the support level at $0.275, a stop loss should be placed at $0.274 to mitigate potential losses. The initial target price should be $0.288, aligning with the forecast for June 11, 2025. If the price reaches $0.288, consider moving the stop loss to break even to protect profits. A secondary target price can be set at $0.295, based on the final forecast price for June 12, 2025. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Dogecoin has shown a significant downtrend, particularly from May 28, 2025, onwards. The RSI consistently remained below 50, indicating a bearish momentum. The forecast for the next week projects a continued downward trend, with prices potentially reaching $0.17. Considering the support price of $0.163, a short position appears to be the most logical strategy. Therefore, I recommend entering a short position at $0.188. To manage risk, set a stop-loss order at $0.194, just above the recent resistance level. For the target price, aiming for the support level of $0.163 would provide a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. The price consistently trading below the middle band reinforces the downtrend. A further decline towards the lower band, currently around $0.174, is anticipated. Combining the RSI and Bollinger Band signals, I suggest adjusting the target price to $0.17, aligning with the forecast and the lower Bollinger Band. This combined strategy offers a high probability of success given the prevailing bearish sentiment and technical indicators. The final position is short at $0.188, stop loss at $0.194, and target price at $0.17. Based on the historical data and forecast, Cardano has been in a downtrend, with a significant drop from $0.761 to $0.627 over the past 2 weeks. The RSI consistently indicates oversold conditions, with values below 40 for the majority of the period, reaching a low of 30.4. The forecast predicts further decline, with prices potentially reaching $0.586. Considering these factors, I recommend a contrarian strategy, aiming to capitalize on potential short-term bounces while acknowledging the overall bearish momentum. The support level at $0.61 is crucial, and the forecast suggests a test of this level is likely. Therefore, I propose a strategy with an entry price of $0.627. A stop loss should be placed just below the support level at $0.597 to limit potential losses if the downtrend continues. The initial target price is set at $0.665, aligning with the recent high and aiming to capture a short-term rebound. If the price reaches $0.665, we can reevaluate the situation and potentially set a new target price closer to the resistance level of $0.637, or even close the position if the overall trend remains bearish. The Bollinger Bands indicate that the price is approaching the lower band, which could signal a potential bounce, but caution is advised given the prevailing downward trend. Based on the historical data and forecast, Sui exhibits a clear downtrend, particularly evident in the recent forecast prices ranging from $3.03 to $2.59. The RSI consistently falls below 50, with a significant dip to 32.5, indicating oversold conditions. Considering the support price of $2.23 and the declining forecast, a short position is warranted. Our primary strategy will be a short strategy based on the RSI and Bollinger Bands. We will enter a short position at $2.93, placing a stop-loss order at $3.07, just above the lower Bollinger Band, to mitigate potential losses if the price rebounds. The initial target price will be $2.59, aligning with the lowest forecast price. To refine our portfolio, we'll incorporate Bollinger Bands and RSI signals. When the RSI falls below 30, signaling a strong oversold condition, and the price touches the lower Bollinger Band, we'll initiate a short position. We'll enter a short position at $2.93, with a stop-loss order at $3.07. If the price reaches $2.59, we'll secure profits. However, if the price fails to reach the target and bounces back towards the resistance level of $3.19, we will exit the position and secure profits at $3.19. This layered approach combines technical indicators with support and resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows a downtrend. The RSI consistently falls below 50, reaching a low of 31.7 on June 5, indicating oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the forecast prices are consistently below $13.4. Therefore, I recommend a contrarian strategy focusing on short-term gains. We will implement a buy strategy when the RSI reaches an oversold level of 20 and sell when it reaches an overbought level of 80. Specifically, I suggest entering a long position at $12.7, coinciding with the forecast price on June 12 and the recent support level. Set a stop loss at $12.6, just below the established support to limit potential losses. The initial target price is $13.9, the recent resistance level. If the price reaches $13.9, and the RSI is below 80, consider setting a trailing stop loss to protect profits. This strategy combines RSI signals with support and resistance levels and the forecast to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Curve DAO shows a downtrend with increasing volatility. The RSI consistently remains below 80, indicating it is not overbought. The recent RSI values, particularly the 36.0 on June 5, suggest an oversold condition, presenting a potential buying opportunity. Considering the forecast, the price is expected to continue its downward trajectory, initially to 0.653 on June 6 and then further to 0.606 by June 12. The support price of 0.584 provides a potential floor, while the resistance at 0.632 is unlikely to be breached in the short term. The Bollinger Bands are widening, signaling increased price fluctuations. Therefore, I recommend a contrarian strategy focusing on short-term gains. Initiate a buy position at 0.653 on June 6, 2025. Set a stop loss at 0.637, just below the recent low and below the center of the Bollinger Bands. Aim for a target price of 0.688, close to the recent resistance level. If the price reaches 0.688, consider taking profits and re-evaluating the market conditions. This strategy leverages the oversold RSI and anticipates a short-term bounce before the downtrend resumes. The portfolio should be 60% curve DAO and 40% in cash. Based on the historical data and forecast, Stellar shows a downtrend. The price has been consistently facing resistance around $0.273 and the forecast indicates further decline towards $0.247. The RSI consistently hovers below 50, indicating a bearish momentum. Considering the oversold level of 20 and overbought level of 80, we can implement a strategy to capitalize on this downward trend. I recommend a short position entry at $0.267, placing a stop loss at $0.273 to protect against unexpected upward movements. The initial target price should be $0.257, aligning with the forecast price and the lower Bollinger Band. To refine the strategy, we incorporate the Bollinger Bands. The price has been consistently trading near the lower Bollinger Band, reinforcing the downtrend. If the price breaks above the upper Bollinger Band, it signals a potential trend reversal, and we should exit the position. If the price reaches the initial target of $0.257, we can consider a trailing stop loss at $0.254 to capture further gains if the downtrend continues. This portfolio combines the RSI and Bollinger Band signals to create a robust short-selling strategy with clearly defined entry, stop loss, and target prices, aiming for high returns in a declining market. Based on the historical data and forecast, NEXO shows a slightly decreasing trend. The price has been fluctuating within a range between $1.21 and $1.26, with support at $1.04 and resistance at $1.24. The RSI values have been oscillating around 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a potential volatility contraction. The forecast indicates a continued downward trend, with prices expected to fall to $1.19. Therefore, a short-term, moderately conservative strategy is recommended. I suggest a short position strategy. Entry price will be $1.22, with a stop loss set at $1.26 to protect against unexpected upward movements. The initial target price is $1.21, aiming to capitalize on the anticipated downward trend. If the price breaks through the $1.21 level, a second target price of $1.19 can be considered. This strategy combines technical indicators and forecast data to manage risk and maximize potential returns. The RSI is not at an oversold level, so we should be careful about the short position. Based on the historical data and forecast, Bitcoin has shown a downtrend over the past 2 weeks, with the forecast indicating further decline. The RSI consistently below 70 suggests the asset is not strongly overbought, while the recent dip below 50 indicates weakening momentum. Considering the support price of $95,000 and the forecast prices consistently below $102,900, a short-term bearish outlook is warranted. Therefore, I recommend a short-selling strategy with an entry price of $102,900. The stop loss should be set slightly above the recent high of $105,800, at $106,000, to limit potential losses if the price unexpectedly reverses. The initial target price is $98,600, aligning with the forecast for June 12, 2025. To refine this strategy, we'll incorporate Bollinger Bands. The price consistently trading near the upper Bollinger Band suggests a potential pullback. We will combine this with the RSI strategy. If the RSI falls below 30, indicating an oversold condition, we will cover the short position at $101,400. This combined approach leverages both momentum and volatility indicators for a more robust risk management profile. The final portfolio will be 60% short selling strategy and 40% RSI strategy. Based on the historical data and forecast, Compound shows a slight upward trend, with the price fluctuating between a support of $40.6 and a resistance of $44.9. The RSI values indicate that the asset has been mostly within a neutral range, occasionally dipping slightly into oversold territory but rarely reaching overbought levels. The Bollinger Bands show that the price has been fluctuating within a range, and the forecast suggests a continued upward trajectory, potentially reaching $44.8. Considering this, I propose a strategy combining RSI and Bollinger Bands for optimal returns. My strategy involves a long position when the price touches the lower Bollinger Band and the RSI is below 30, aiming to capitalize on potential rebounds. For the upcoming week, I recommend entering a long position at $42.7, with a stop loss at $40.6, just below the support level. The initial target price would be $44.7, aligning with the upper Bollinger Band and a potential resistance level. If the price surpasses $44.7, a trailing stop loss can be implemented to secure profits and allow for further gains. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Pendle shows a fluctuating trend with recent support at $3.96 and resistance at $4.3. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a potential downward trend in the short term, with prices ranging between $4.05 and $4.07. Considering this, I propose a cautious short-term strategy utilizing the Bollinger Bands. My recommended strategy is to initiate a short position when the price touches the upper Bollinger Band. Specifically, enter a short position at $4.07. Place a stop-loss order slightly above the upper Bollinger Band at $4.12 to protect against unexpected upward movements. Set a target price at $3.96, aligning with the recent support level and anticipating a potential retracement. This strategy combines the predictive power of Bollinger Bands with the support level to maximize potential returns while minimizing risk. Based on the historical data and forecast, Sun token shows a slight upward trend with price fluctuations within the range of 0.0186 to 0.0197. The RSI indicates that the asset is currently in a neutral zone, fluctuating around 50, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the middle band, indicating low volatility. Considering these factors, a moderately bullish strategy is recommended. We will implement a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk. The strategy involves a long position with an entry price of $0.0192. The stop loss will be set just below the support level at $0.0185 to protect against potential downside risks. The target price will be set at $0.0202, slightly above the upper Bollinger Band, aiming to capture potential upside gains. This strategy will be adjusted daily based on the RSI and Bollinger Bands readings. If the RSI falls below 20, oversold, we will consider accumulating more positions. If the RSI exceeds 80, overbought, we will consider taking profits or reducing our exposure. The forecast suggests a continued upward trend, reinforcing the bullish outlook for this investment. Based on the historical data and forecast, PAX Gold shows a slight upward trend, consistently bouncing off the support price of $3,350. The RSI fluctuates around 50, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a potential upward movement towards $3,410. Considering these factors, I recommend a long position strategy. We will enter a long position at $3,380, placing a stop-loss order at $3,350 to mitigate potential losses if the price declines. The initial target price will be $3,410, aiming for a quick profit from the forecasted upward movement. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, around $3,180 to $3,220, it signals a potential buying opportunity. Conversely, when the price reaches the upper band, around $3,380 to $3,420, it suggests a potential selling point. Therefore, if the price retraces to $3,380, we will re-enter the long position with a tighter stop loss at $3,360 and a revised target price of $3,410. This combined strategy leverages both RSI and Bollinger Bands to optimize entry and exit points, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, DeXe shows a clear downtrend. The price has been declining from a high of $14.2 to a low of $8.94, and the forecast indicates further declines, reaching as low as $8.32. The RSI consistently remains below 50, with periods of oversold conditions below 30, confirming the bearish momentum. Furthermore, the price is trading below the Bollinger Bands, suggesting a continued downward trend. Therefore, I recommend a short selling strategy with an entry price of $10.6, a stop loss price of $11.6, and a target price of $8.32. To optimize returns, I propose a portfolio combining a short selling strategy with a conservative approach. Initially, enter a short position at $10.6, setting a stop loss at $11.6 to limit potential losses if the price unexpectedly reverses. As the price declines towards the $8.32 target, consider taking partial profits to secure gains. The RSI readings suggest that the asset is oversold, which might lead to a temporary bounce. Therefore, a trailing stop-loss strategy could be implemented once the price reaches $9.01, adjusting the stop-loss downwards to protect profits while allowing for potential further declines. This combined strategy balances risk and reward, capitalizing on the anticipated downtrend while mitigating potential losses. Based on the historical data and forecast, TRON shows an overall upward trend, consistently testing the support level of $0.275. The RSI fluctuates between 49.5 and 66.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation, but the forecast projects a breakout with prices moving towards $0.295. Therefore, I recommend a long position strategy, capitalizing on the anticipated upward momentum. Specifically, I suggest entering a long position at $0.278. Given the support level at $0.275, a stop loss should be placed at $0.274 to mitigate potential losses. The initial target price should be $0.288, aligning with the forecast for June 11, 2025. If the price reaches $0.288, consider moving the stop loss to break even to protect profits. A secondary target price can be set at $0.295, based on the final forecast price for June 12, 2025. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk effectively.